Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, August 24th. Well, firstly to the S&P 500 today, and obviously very strong selling in this market today. A very large black body candle, the third consecutive very large black body, very strong downside momentum, strong commitment from the sellers. The writing was on the wall after the market broke out down below the 2040 level of support, this zone of support, after the market had been hovering above and below the Ichimoku cloud for quite some time, suggesting a lot of indecision at the major highs and up around this 2134 level. The strong follow-through following the breach down below 2040 suggested that the sellers certainly were the stronger party in this market, and surprisingly today we've seen continued follow-through with even more downside momentum. Now the market is really at an extreme, and it wouldn't surprise to see some buying come in to counter this very strong selling. Now that doesn't mean that we are going to trade back up to these levels up near this 2040 level in a hurry. But we certainly could trade back up and retrace part of this very significant first time frame downtrend that the market's been in now for the last week or so. Importantly, 1867.92 is where the market has found support, and that will be an important level moving forward. We do have some strong support below there, extending down to the bottom of this small highlighted zone, an important area from the past, and that's down to about around the 1831 level. That will be very important. If we close down below there in bearish manner, we could see the market continue to fall. Importantly, the market has taken out the 1900 round number, and in a fairly strongly bearish manner, suggesting that still the sellers are very strongly committed. Any attempted rally here may find resistance around this small zone below the 1925 area. Now, importantly, looking at the Fibonacci extension, here we're examining the relationship of the current first time frame downtrend to the immediate previous first time frame downtrend. And here we're seeing the market at an extreme. Tested through the 423.6% level, and we've seen price rejection from there. The market unable to close down below there. Now, the thing is, normally we don't see markets test down through those levels. We can, but it's abnormal. Now, this is not a normal situation. This is a very abnormal situation in these markets at the moment. But there is some hope here for the buyers in a short-term sense with the price rejection from that 423.6% level. What I would have preferred would have been to have seen a white body candle, the market closing up above the open, and the buyers attempting to build some momentum. All we've seen is a small loss of commitment by the sellers here towards the end of the trading day. But we should be watching this 423.6% level, the low of this current candle. There is some small hope here for the buyers here based on the rejection from that 423.6 area. And also with the Fibonacci Retracement tool, we're in an expansive mode of that. We've traded through the 100% level, 161.8, 261.8% level, and if we look here closely, testing through the 423.6% level again, that extreme level, price rejection from there, some a small amount of buying coming in, suggests a possibility of buyers coming back into the market around this area. The market isn't at an extreme, but we don't have any hint here of any really decent strength from the buyers. The sellers are still in control, so there is a possibility of some buying coming in, but no strong signs of that yet, other than the combination of the two Fibonacci techniques showing some price rejection from the 423.6% levels. Moving next to the Dow 30, and here we see probably the strongest market in the equities market. Previously, if you recall, we were watching this development of the second time frame downtrend after the market behaved in a very different manner to the Nasdaq and the S&P, with the series of lower peaks and lower troughs well down below the Ichimoku cloud, establishing the downtrend in all three timeframes. So at something of an extreme, we have seen some better buying coming into this market than we have seen along with the S&P and a larger shadow on the bottom of this candle. It means that the sellers have lost commitment to a larger degree than we saw with the S&P, and we've seen the market close just below the midpoint level, suggested that the sellers have only closed with a very weak amount of control. So there is hope for the buyers here, bouncing off some very important areas of support: 15,703, 15,542 and 15,340, and that 15,340 is going to be an important level. If that's breached for tomorrow's trading, 14,887 is the next area that we should be watching for support to come in. But there's a real possibility of this market testing two higher levels. If we look at the angle of both the Kijun-sen and the Tenkan-sen, they're pointing down very, very sharply. It's reflecting very strong downside momentum. Even the angle of the Ichimoku cloud here is pointing down very sharply. Strong downside momentum, something of an extreme. The angle there is too steep. The market is trading a fair way away from the Ichimoku cloud now, and also from the Kijun-sen, and suggesting that we certainly could see buying coming in. The problem's going to be that if the market can retrace this very strong first time frame downtrend and trade through some of these areas up through 16,015 through the round number 16,000, we're likely to find strong resistance at the Tenkan-sen indicator trading at 16,469, and then we could see some more selling come into this market. Moving to the Fibonacci Retracement tool, and here, as we've seen with the S&P testing down through the 423.6% level, the loss of commitment from the sellers suggests, even more so in this market, that we could see some buying come into this market. The market could be a little overdone, and we could see a change of trend back to the upside. The inability to close down below there suggests that there is now some weakness in terms of the selling. The only problem is that we haven't seen strength from the buyers here. And also the Fibonacci Extension tool here, examining the relationship of the current first time frame downtrend to the immediate previous first time frame downtrend, being rejected from the 423.6% level, failing to close below there. The buyers only closing with a moderate amount of control, although we have closed a long way away from the previous close, so still a lot of strength from the sellers. Sorry, I meant the sellers closing with a moderate amount of control, and suggesting that we have seen a weakening in the sellers and a possibility of a change of trend, but it's only a possibility. We need confirmation. Moving next to the Nasdaq 100, and this is the way that we'd like to see this candle form, a white body candle. It means that the buyers have come into this market and built some momentum in net terms between the open and the close. It means that the market has closed higher than where we've opened, and the net effect throughout the trading day has been a shift to the buyers. Even though the trend is still down, it's very dynamic trading to the downside. The low here is a long way away from the previous low, and in terms of trending price action, it's very dynamic. But we have seen a gain here by the buyers to a degree in terms of the short-term dynamics, and suggesting a possibility of the buyers coming back into this market. The problem for the buyers has been this highlighted yellow zone of previous support and resistance in the past, and we've seen the market unable to close into that level. The market has been rejected from there, and it does raise doubt about whether we are going to see the buyers able to trade up through there and change the trend. Looking at the Tenkan-sen indicator and the Kijun-sen, these two green lines and the pink line, they are pointing down very sharply, as is the Ichimoku cloud and as is the Chica span, reflecting the very strong downside momentum. This market is looking over, extending the depth away from each of these Ichimoku indicators, and it certainly wouldn't surprise to see the market attempt to trade through this highlighted zone. 41.47 is the top of that area, and a bullish close up above there then could see the market attempt to retrace to higher levels. We may find some strong resistance at the Tenkan-sen. Very often when we have downside momentum, it tends to hold. It's a very strong area, and that trades at 41.77. Now, just looking at the Fibonacci Retracement tool here with the Nasdaq 100, we're in expansive mode. Strong selling down through the 161.8%, 261.8% level. We've tested down through the 423.6% level. Very strongly down through there, but we have been rejected from there as well, with the buyers attempting to take control in this market and building some upside momentum, suggesting that we could see a change of trend in this first term time frame. So watching the high of this current candle at 4199. Now, just looking at some of the ETFs and looking at the asset classes and where we've seen capital flowing to, and here we see formation of a black body candle in GLD, the gold ETF. It's a bearish engulfing candle, and this comes in at this important resistance area at the Ichimoku cloud, and this suggests that we could see selling coming into the gold market. In terms of relative strength comparative, still strongly outperforming the overall market, strong upside momentum in terms of relative strength, and volatility is trending up, and it has manifested itself as this strong uptrending price action. But there was always going to be potentially important resistance coming in at the Ichimoku cloud. What we need to watch if we do see a change of trend confirmed is support at the Tenkan-sen indicator at 109.21. If that area is breached, we could see this market test down to the Kijun-sen, but there certainly is a possibility of us having seen a break in this selling in the equities market in terms of funds not being allocated towards the gold safe haven at the moment in this short-term time frame. Looking to the bonds ETF, TLT is the code 20 plus year Treasury Bond Fund, and here we see still a strong market in terms of Ichimoku, but finding support at the Tenkan-sen indicator, a black body candle, so selling coming into this market today as well. In terms of relative strength, still strongly outperforming. We should be watching the Tenkan-sen indicator here, 125.96. If we see selling coming in, it will be a sign that we're seeing a no longer an allocation of funds towards bonds. That is an important level. If we test down through there, we could see this market trading down through to the Kijun-sen at 123.29. Just looking at IGF, which is the S&P Global Infrastructure Index Fund, and here we've seen trading activity down below each of the Ichimoku indicators, strong downside momentum as suggested by the Chica span, but relative strength comparative has actually moved higher, and momentum of relative strength is moving higher, volatility is moving higher as we trend down. But the important thing here is that this market infrastructure is outperforming the equities market at the moment, so we may have seen an allocation of funds here to the this infrastructure market away